All right, traders, I am back again with another video. And in this video, I want to take time to show you how I am trading the Forex market using the three Ichimoku theories, the time, wave, and price observation theory. I will show you how I'm using those. Now, today's video is not to show you or teach you basically how to use those theories. It'll show you some of that, but I'm going to put out a series here on YouTube that's going to really teach you how to use these theories and how to put them into play when you're trading. But today, just want to show you how I'm using them a little bit, and you will pick up on some things. But if you want to learn even more, visit my site at www.fxatOneglance.com and become a member, and you'll be able to have access to my new course that I am putting out. It's my Advanced Japanese Techniques course, where I will teach you all of these theories. The course has been out already, but I'm updating the course and adding some content to it and giving folks more example of how to really use this system in play for the real markets. So if you want to learn that, visit my site. But if you want to see how I'm using it, watch here. Coming up right now. All right, traders, let's start this off by talking about the wave theory, which consists of 6 main wave formations. Those formations are the I wave, the V wave, the N wave, the P wave, the Y wave, and the S wave. I'm not going to show you an S wave until we get to the active charts, because there's an active S wave I want to review with you. But basically, the market, Ichimoku main theory is that the market moves in 3 waves and then 5 intermediate waves, which would mean one wave would be this I formation, this I wave, which is basically an impulse move. All right. It can be an impulse move to the upside or an impulse move to the downside. Basically, this I wave, that's what you have. So you have a bullish I wave, bearish I wave. All right. And then when you add another I wave, you'll have an I wave up and an I wave down. This will equal a V wave. As you can see, it looks like an upside down V. And the concept is this is the second wave. So you have 1, 2. So 2 wave formation. All right. So here you have the I wave up, I wave down equals a V wave. Then in the bearish market, you have an I wave down plus an I wave up equals a V wave. As you can see now, that looks like an actual V. Okay. And then finally, you have the 3 wave formation that the market basically moves in throughout. And this is the N wave. So you have the I wave up, I wave down plus a I wave up equals the N wave. So now you have an N wave based off of the market moving 3 waves, 3 I waves, 3 consecutive I waves make this one N wave formation. This is a bullish N wave. And here you see a bearish N wave. I wave down, I wave up, I wave down. 3 wave formation, 3 wave move. This is what the basis is of Ichimoku. All right. So that's a 3 wave move formation. Then you have a P wave. You're going to see a lot of P waves in the market. Those are very good to get into, basically known as diagonals to most traders. So the P wave is well, basically you would probably know it more like a triangle or a pennant formation. So where it's basically has 5 alternating internal waves of smaller wave structure, and they occur in a bull or bear market, and the rally can be in either direction. All right. So here you have the P wave. Here you see a bigger formation of the P wave. Here you see the P wave 5 wave structure. And then here you see a P wave 5 wave structure breakout. So it breaks out of this formation to the upside at this point. And as you look at the chart here, you could see a bunch of P waves here. There's one here, another one here, and then when you also have smaller P waves on your chart throughout. And then here you have a Y wave. So the Y wave is going to be basically the alternating 5 wave pattern. So it's what probably known as a broadening top or a bottom formation. It's like a triangle type consolidation where the price swings get larger with time rather than smaller. And again, it could start with a rally or end with a decline, basically. And here you see a Y wave 5 wave structure and then the breakout. Okay. So next we're going to go to the range observation theory, price observation theory. That theory basically talks about, we just talked about the waves of a market. All right. So we talked about the completion wave is this end wave. That's what we're going to be looking for in the market at all times, most of the time. So when you look at that, you're going to be looking for where the market could move to. That third leg, that third wave, where could that move to? Well, the way to find that is basically your observation theory, which is also you can use for targets when you're trading, right? Because you're going to know the distance where you're going to think that the market will go to. So basically we're looking at this now is an N wave with a target, a E target, all right? So that E target is based off of this B. So you have A, B, C, which is basically a 1, 2, 3 formation that most traders know. And then we're looking for the D formation, the D level, basically. So what that would mean was B plus B minus A. So take this B, this AB leg. What I say is take the AB leg and add it to the top of B. So if this is 100 pips or 200 pips or whatever, you add that 100 or 200 pips to the top of B, and that will give you that E target. That's going to be one of the largest or deepest levels that you're going to be looking for when you look for targets. Next is going to be this V target. All right. So basically what you're going to see here is you're going to also shoot for a V level. So you're going to be shooting for 4 levels in the market. You're going to look for the market to move to 4 levels. And this is going to be another level. So you had the E level. Now you have the V level or the V target. And that you find that target by taking B. All right. And adding B minus C. So whatever this BC leg is, suppose it's 50 pips, you add it to the top of this B, add it to the top there, and that'll give you the target. All right. So you're going to be shooting for that target also. You get into a trade in this area, you know where you can shoot for. Next is going to be this NT calculation. So this NT calculation, this is not NT, this is N. I'm looking ahead of myself. This is the N target. So this is the most widely used target that you're going to have because it's basically what we know as a 1-to-1 ratio, a measured move. All right. So what it means is this leg is going to be the same length. So what it is, AB added on to C will equal N. All right. So you take this C plus B and A. BA. So whatever B and A are, you add to C. So if this was 200 pips, you add 200 pips from C, and that'll give you this target here. Now I'm having a calculator made where I'm going to put it on my website, and I'll just be able to punch in these numbers, and I'll be able to draw these levels on my chart. And I'll show you what I have on my chart because I put those on the chart prior, because you have to analyze the market, and you'll leave those on there pretty much, unless something changes in the long term. But you're trading basically the monthly, the weekly, and the daily time frames. Using those levels, you're not going to get a lot of change that quick. Okay, so you'll be able to keep them on your charts for quite a while. And then finally, the last level is going to be the NT target, which is going to be A, B, C, and we're looking for D, which would be NT target. How do you find that target? You take this C and you subtract A. So whatever from C to A, back down to A, let's say that's 75 pips from A up to C, or C down to A, 75 pips. Then you take that and add it to C. So if it's 75 pips to this way, I'm going to add 75 pips to C again, and that'll give me this NT target. All right. That's not one. Well, actually, I've been noticing it hit a lot more than people would say, because a lot of times it's usually not hit, but I see it being hit a lot when I'm looking at my charts. So we'll talk about that when we go to it. And then finally, we're going to go to the time observation theory. And we're not using all the concept. We're not adding everything. There's so much more to explain to you, but I'm giving you the very, very basics so that when we talk about the charts, you understand a little bit about what I'm talking about next. So the most basic idea of Ichimoku is that the completion of the three waves and the equal numerical value has a great influence on the direction of the market. The equivalent value is the number of days from the high price to the low price, or the low price to the high price. And I'll show you that on the charts. The concept is that the past market influences the current and future market, and the concept of time sets some numerical values in advance and looks at the active side of the market. So the basic numerical values that you're going to be looking at will be 9, 17, 26. And then the complex numerical values are 33, 42, 51, 65, 76, 83, 97, 101, 151, 226, and so on. All these numbers are based on 9 and 26. 17 equals 9 times 2 minus 1. 33 equals 17 times 2 minus 1. 42 equals 17 plus 26 minus 1. 51 equals 26 times 2 minus 1. 65 equals 33 times 2 minus 1. 76 equals 26 times 3 minus 2. 83 equals 42 times 2 minus 1. 97 equals 33 times 3 minus 2. 101 equals 51 times 2 minus 1. 151 equals 51 times 3 minus 2. 226 equals 76 times 3 minus 2. We're subtracting numbers with the complex numbers because the numbers are used twice at highs or lows, and you'll see what I mean later. And again, remember, there's so much more to explain than just these numbers to you. All right, so I'm very basic with this stuff right now. So what we're going to do is go to these charts right now, and I'm going to start looking at some of the market and show you what I've got on my charts and what I'm looking at for the upcoming markets. So let's go to these charts. All right, guys, so basically I'm starting off here with a monthly chart. All right. This is a monthly time frame chart that I'm looking at of the Aussie Swiss franc. I'm going to break it down shorter time frames. You could use this on the monthly, weekly, daily. Here I started with the monthly. Some of them I'm going to be doing with the weekly and the daily, and I'll show you why and what I'm looking at when I go to the lower time frames, because I'm going to go top down analysis. So when I'm looking at this chart, guys, basically I started my move right here. I started my count. So when we looked at that N wave, remember, so we have 1, 2, 3, 4, and we want to see where that target is. So we have A, B, C equals what? We were looking for that N target, that E target, that V target, and that NT target. Well, these points give me that target right here, these 4 targets. So when I'm trading the market, once I get to this point and I find out that this is a high point where it's going to be that A, B, and then that C point, and then I can shoot for the lower level. And then I can also start adding numbers in here where I'm going to start looking at this. All right. So we're not going to get deeper into how to add the numbers and look at numbers on your chart right now, because we just need to know the basic stuff today. But I want to show you the lower time frame, okay, and what I'm looking at also. But what I'm looking at basically, and what I'm thinking the market's going to do, we already shot way down close to the E level. Now you can see how the market reacts near these levels, okay, because we came down, pushed off of the V level, and then moved up to the NT level and sat above it for a little while, then went above it and then bounced on it right here again, then kind of broke through and then sat on this V level. And then we broke through the N level and then back up to the V level. Here's where I'm looking at the market right now currently. So we're sitting right off of this V level. You can see we rejected it already. So rejecting this level, probably going to see the market drop to the downside. The trend is to the downside. You can see I'm using the zigzag indicator here, which helps me to draw these waves in the market a lot better than me doing it myself. And then I use these and I'm a little bit more accurate, I suppose. But this will help you out a lot, and that's why I'm keeping it on my chart, because I realize how well it helps me. So the thing is, now that I can continue to even trade, I didn't get in a trade back here, but even trading here, I can use this V level, and it's also lining up with this fractal level that has a strong rejection point and looking for the market to shoot more to the downside. So I know when I trade, I can probably shoot for this N target, see what price does and breaks through that level and shoot for the E target. Now also I'm going to start using time analysis in here because I want to see the market repeating these time moves. So basically, like, you have this I leg and this V leg, so you want to see maybe two V legs, right? So you would take this V leg, which here was basically, oh, wrong one. Let me get the other one. This V wave completed in 25 bars, right? And then this V wave completed in 29 bars. So you're trying to find that equal numerical value, and there's a bunch of ways that you can do it, and I can't really break that down today right now, but some of it is like I equals I, so you'll shoot for the basic I wave. So maybe the I to I would be this, would be looking at this 17 bars, and then I go to my next I, and I would shoot for 17 bars. Here it was 11 bars. Now to this high, it took us to 15 bars. All right, but then learning how to use these numbers is going to help you a lot. Now I'm not going to really explain it deep because we'll be here all night, so I want to give you the basics and look at the market real quick. Okay, so I am looking at a trade possibility here. So what I'm looking at on the big picture is that we're bouncing off of that V level, all right, and also this fractal level that I have drawn on my chart. I'm going to go down to the daily time frame here. Now on the daily time frame, you could see those levels. Now you could see what I'm looking at with Ichimoku is I want to see this breakdown, okay? So Chiku span is breaking, ready to break below price. We kind of ranged here. Now there's a formation that you're going to look for in the market to see the change. Now one thing that you could look for is going to be a head and shoulders formation or an inverted head and shoulders. But this point also, you're going to look for this formation. I'm going to show you really quickly. Let me add this onto the chart. So this is one of the formations. You get this high, you put in a high there, and then you put in this low, right? And then your next high is at this point. If that's going to remain the high, does not break this high, and then the next move you should see would be this, which then breaks this level. All right, we'll break this level. That's where we know we're in a good trade. At this point, it would be more like a Kumo breakout here, it looks like. And then you could see the possibility of the market dropping. Now, again, from all things that I know, and from everyone that I've learned from or talked to or whatever, really the signals come from the Western traders, Japanese traders, and basically, I mean, Japanese traders do use signals, but basically when Mr. Hosada wrote the book and wrote Ichimoku, developed the Ichimoku, he didn't have any signals. It wasn't signal based. You can enter the market based off of the time. That's how you're going to enter the market, based off of the best time to enter the market. Okay, so that's what you'll be looking at here. And now you can see we're looking for that leg to drop, break this level. That'll put this into full reversal mode. Then you should see Chiku span breaking through the cloud and so forth, all kinds of things at that point. All right, so we should see that downfall. Now what you can do then, right, you're going to measure, and I'm not going to add it real quick, but I'm going to show you exactly what you're going to do. So now when you shoot, say you get in the trade here, you now have that 1, 2, 3, that A, B, C, and you're shooting for the next levels. So you will now add your A, B, C points to find your targets. So these aren't the real targets. I don't have time to put them in. Well, actually, I'll put them in for you. So if we're going to say that this is the point, so we're going to put this in as A, we're going to put these in here, okay? So I'll add this. So let me show you exactly what I'm talking about. All right, so I put the levels in, the numbers in, the points in for you. A, B, C, and we're shooting for N level, E level, V level, NT level. Let me show you where those are. So we're looking for the market to drop, especially if we break this point right here. We should probably see the market drop pretty good. So I'm going to put those levels in on the chart for you real quick so you could see those levels. And that's where we will be shooting for when we take this trade. Now, overall, I feel like we can shoot. We don't really need to put levels on the chart right now because when we looked at this, we already have these levels from the monthly that we can use for the market to go to. But on the lower time frame, we could put those numbers in. So I'm going to put those numbers in and let you see exactly where they are and what you would shoot for short-term trading off of the daily time frame. All right, so let's add those numbers right now. All right, let's add those levels right now. All right, guys, so now you could see I have added these numbers, these letters, not these letters, but these levels for you to see where we could shoot for. So basically now we talk about getting into the trade anywhere in here. We're going to shoot for this N level for 1. That'll be the same measurement as this leg right here. And then this V level and this E level. Now they pretty much line up with the big time frame N level. When I go back to the monthly, they would pretty much line up with this higher time frame level. So basically, I don't feel like I really need these levels on here. I could probably keep this N level on here. But other than that, I'm probably going to just shoot for this level here, thinking on the big term. So that's where I would look for the market to go down to. And then also you start using some time observation theory with that also. I mean, some time analysis with that also. So then you would start looking for times and days of change and so forth. But at this point, these are the points where I would be looking for. So I am looking at this trade. Again, I told you we had the monthly time frame. We're rejecting this level off of this V level. Also looking at the daily, dropping in here. So now I'm going to wait for, more than likely you want to get a break below this B level for entry into the market. Now, a good thing again will be the Kumo breakout. It'll take you probably close to your N level. At that point, you'll probably see the market reacting. But overall, I think you're going to be able to see the market get down to this longer term N level here at about 0.61140. All right, so that's going to be the Aussie Swiss franc. The next one I want to look at is going to be Aussie yen. So Aussie yen, I did just want to show you. I didn't really have much that I wanted to show you on Aussie yen. Actually, no, I did. Yes, Aussie yen was some things here. But what I did want to show you on this one was, let's go back to the daily. I thought I had an S wave I wanted to show you, but maybe it's on the higher time frame here. Actually, here it is. So I wanted to show you this S wave. Really, this S wave is almost like an N wave, but there's a little bit of a difference. So I'm going to show you exactly what I'm looking at here. All right. I'm not going to take stuff off the chart because I need this on here. But this leg and then this leg, and then this leg. Still that three wave formation here. But the thing that you could see now, if I draw a line, a horizontal line here, it lines up here. All right, so you could see, and this is basically a big fluctuation area, but it still looks like an N pattern, but in reality this is a S wave. All right, but looks like a nice big N wave. The thing about it is that they come back here and touch pretty much, and that's a clear sign almost, because it's looked at as fluctuation. Now also you look at it on a smaller time frame and you'll see that it's more of a fluctuated move. All right, so that's what I wanted to show you, that S wave. That's what it basically looks like. Now what I'm looking at here is basically the market changed direction here. So again, I told you the formation that you're going to look for the market to change is this high, then a low's put in, then another high, and this is basic. Once you get this second high that's lower than the previous high, and then you're breaking this level here. Now on a monthly time frame, that's some time here, but you could see now we know what the market is doing. We're definitely going to use this high, shooting for levels. So again, I had my A, B, C, and I want to shoot for those NT level. So the NT level, this N level, this V level, and this E level. So the big thing that I'm looking at again is almost the same thing as the previous pair. Is the market moved up to this, almost to this NT level, actually right near that NT level and almost on this fractal level. So there's a fractal zone here that the market pushed up to. Everything is bearish. You could see we're losing a little momentum, but you're still bearish, and we're looking for the market to continue this move to the downside. You got a correction here. All right, so this previous correction was 1, 2, 3, 4, 5. This one is 1, 2, 3, 4, 5 days. So 5, 5. Now we're looking for that market to drop after this next month. After the close of this month, the next month, we should see the market drop into the downside. We rejected off of this upper fractal level here, which also lines up with that NT level. Let's go to the smaller time frame, the daily time frame. And you could see exactly what I'm talking about. So now you could see the market pushed up against this level. I have this drawn out as a zone here, but we didn't quite hit that NT level. We missed that a little bit. Now we're looking for the market to break to the downside based off of everything that we're looking at. Now we're still, I kind of drew this as a small P wave, but I don't know, it might not have actually been a great one, but it looked like a little small P wave. And then the market pushed a little higher, pushed into this resistance point, and now we're looking for the market to move to the downside. So with that said, I don't have an entry yet. We may get another push up here. I don't have an entry to get into the market yet, but I'm going to watch for signs of Ichimoku where we get crossed over and everything. Still look pretty strong to the upside based off of what Ichimoku has shown me, but we're coming into some levels. The higher time frame is taking dominance over this chart, and we'll see where it bounces off of this level and drops to the downside. Okay, so that's what we're looking at with this Aussie yen. Aussie New Zealand dollar, just wanted to show you the monthly time frame. Don't really have anything else, but just wanted to show you another P wave here. All right, but see now this P wave, the market was in a decline, made a P wave. A lot of times this will break to the upside. Now I did have a trade setup that I'm looking at here also. So the market put in this P wave, 5-wave formation, eventually breaks out, could break to the downside or the upside. A lot of times this is a bottom move, and you can tell that it will break to the upside. A lot of times when you see this on the bottom, it breaks to the upside. All right, so I want to go to the daily time frame and show you what I'm looking at. So again, what I was looking at here, a clear market move to the upside. Overall, we have this 1 level, 2 level, 3 level. Where's our next level? We're shooting for this NT level. So the levels we're shooting for are right here. NT, V, N, and then maybe this E level at the top. So again, we already can tell where we want to look for our entry. So now what I'm looking for, you do have some bearishness here, but We had a crossover here, and then we're sitting on this little zone right here. This zone is important. If we bounce on this zone and see the market violate this upper fractal, we'll see the market move higher. Then we can start shooting for this NT level. Now, I always tell my traders that you have to get through this point. Even knowing Ichimoku, you do have to get through this point. All right, so you do have to get through that previous high. At this point, sometime the market hits this level and we see fluctuation in the market ranges, you never make it to your levels. A lot of times you'll see that happen. So always shoot that as your first level you want to get through. So we're looking for a trade setup here. Currently we have an indecision candle. What I'm going to be looking at is the market opens up, and this week I'm going to be looking for the market to give me an entry at this point. I'm going to put a buy stop in here. I'm going to put a stop loss slightly below the zone here. Now, I like to start off with the fractal levels. What you want to do is, because that low is, the market's not going to change unless it breaks that low, right? So that's the structure, and it needs to break that structure to change the direction of the market. This is too big for you, right? Well, you're going to have to use smaller lots, and if you can't do that, then you probably don't need to take that trade. Now, you could put your stop loss at this point. To me, I like to be at the level of structure where the market's going to honor, and I know that that change is definite. All right. So looking at this, I'm looking to enter the market at 107.146. Minimum stop loss at about 106.388. Maximum at about 105.343. Using Ichimoku, you're always going to have bigger stop losses. You got to allow room for the market to move. You're not getting in exact entries at times. So that's why you need to have bigger stop losses and be able to afford those stop losses. So that's what we're going to be shooting for. We need to get through this level again. As I said, you take your trade here. Next week we should see this move a little bit higher. Just got the crossover here. You could see starting to roll to the upside. Flat here. Span A is rolling to the upside. Want to see the market bounce here and break this level. Shoot for NT. Overall, shoot for the N level, which would be a 1-to-1 ratio. That's a big leg, though. All right. Because when we looked at the true market on a higher time frame, I don't think we even decided which direction the market was going to go, because we got this P wave here, and we're looking for the breakout, and we don't know which way it's going to break out. So hopefully, if it's going to break out, it'll break out to the upside and do exactly what we said. If not, we lose, and boom. What could I tell you? All right, so let's move on to the next one. That's Aussie New Zealand dollar. Aussie US dollar. Again, really do have some things I want to show you on the lower time frame. Did I do anything on the, this is actually the monthly, sorry. On the monthly, I wanted to show you this big P wave, and then you can see the market change direction. So at the high point here, it was the all-time high, put in a P wave, the market dropped. When you had that previous low on the last chart, the market put in that low, and then the market changed direction with the P wave, okay? And this is a market was moving to the upside. The previous P wave market was moving to the downside. All right. It absolutely changed the direction of the market. Now, I didn't put in the long-term targets, so I just put in the daily targets. I'm going to go to the daily time frame. When I looked at this, we put in from this point. So again, I'm using the zigzag. So the market moves in these three wave formations. 1, 2, 3 to make that N wave, then 1, 2, 3 made that N wave, and then 1, 2, 3 made an N wave, 1, 2, 3 made this N wave, and then 1, 2, and we're shooting for 3 for the completion of this N wave, and we're starting that move. So what I did was A, B, C, and I'm shooting for N, V, NT, and E. Now, those targets are already on the chart. You could see the market's reacting at this NT level. So it had a little bounce at that point, dropped to the downside. Again, it came back to this high here. So that's another structure area where we could look for the trade. Now, maybe we could get a better entry, maybe a little tighter. But what we're really looking for now, based on this daily time frame, would be for the market to give us an entry at this point. I like to be below the fractal. That's deep here. You could put your stop loss below the zone here. Now let's go to the 4-hour time frame. See this real quick. So the 4-hour gave us an entry right here basically would have been entering the market at this point. All right, on the 4-hour time frame. Back to the daily, you can see we're looking for the entry at this point at about 0.71288, shooting for at least the V level and probably max the N level. And if we can break the N level, we shoot for the E level. I let the price action tell me when we get at these levels what I'm going to do. And also, once you start learning how to use your time analysis, that'll help you also, because you'll know quite possibly the day of change. All right, so that's what we're looking at for Aussie USD. Got a couple more, guys. Hopefully this is helping you out a little bit. Did I look at the monthly time frame here? Let me see if I put in anything on the monthly. And actually, there's kind of a P wave developing, but I'm going back to the daily. So when I looked at this daily, again, you could see I'm counting these legs 22 days from this eye to this eye. So you had an I wave here. And then this I wave 23 days right here before we bounced off of this NT level. I counted from A, B, C, shooting for these upper targets. We put those levels in based off of these numbers here. All right, and you get those numbers based off of what I showed you in the beginning of the presentation. All right, those NT levels and N levels and how you get those. All right, we're kind of wanted to get into the trade because we looked at the bounce off of the NT level and we wanted to get into the trade at the zone. Waiting for the daily candle, we kind of missed the trade and didn't get the trade that we wanted because we wanted this area to get into the trade. Missed the trade because we should have dropped to the lower time frame. Well, that wouldn't even helped us because we had a bullish engulfing. We should be in the market at this point. Stop loss below this level. So we'll be looking for the market to move higher. We already rejected the NT level. Had a little reaction at that point. You can even start to count your legs like this. So watch. So this is an I wave. And I'm just doing I plus I for 12 bars. And there's more complex stuff. This is only 5 bars, basically 6 bars. All right, but there's more complex stuff. So we would be looking at maybe V plus V. We would shoot for, that's 18 bars, would take us 18 bars. So things like that. And I'll get deeper with that next time we talk. But right now I'm just showing you where the target was that I was looking to get into the market. It was off of this level here, but I missed it. As you could see, it gave me a bullish engulfing right away and I wasn't ready to get that trade. So I wasn't expecting that bullish engulfing, but I still can get into the trade at this point. Want to measure the distance, what it's going to be for me, and then calculate what how many lots I can get into the market. So that's going to be a bigger stop loss, at least 100 pip stop loss just to get to the bottom of the zone. So at least 100 pip stop loss at this point. All right. And then the market, we're trying to put in a target at the V level, the N level, quite possibly, and maybe the E level. So you got this move here. The market is moving to the upside, and you can see we continue to move to the upside. All right. And this zigzag is showing the waves. All right, so that's what I'm looking at again for the Swiss franc yen. Let me show you the Euro Swiss franc. I'm going to go a little quicker because I know you guys probably are getting tired of watching me. So I'm going to go a little quicker. Again, I have the daily time frame here. I'm going to go to the monthly real quick. And on the monthly here, let's go back to this daily. See if we could look at the target trades. So again, we're looking at trading this level here. Let me see what the big level is. Okay, I don't have those drawn on the chart. But basically what we're looking at is trading this point right here. 1, 2, 3, which was A, B, C, and we're shooting for these levels. So that being that this was such a deep retracement, all right, such a deep drop, that makes your NT much closer because remember, how do you get that NT level? you get that NT level like this, from the bottom to this level, and then you add that from that level, which will give you that NT level. All right, so how do you get your E level? You just go basically from the point A right here to this point high, and I'm going to add that onto the top of B, which is this point right here. And when I add that, I get that level. So when I want to get the N level, this leg I just measured, I'm going to add it to the C leg right here, and that'll give me the N level. And then finally the V leg is going to be from C to B, and then I'm going to add it to B right there, and that gives me that V leg. So that's all the levels. That's where you get them. I use the calculator, put them in, and then I just draw these on my chart with the levels mentioned. So I'm looking for the market to move higher here. We have an inside trading for the past 6-7 days. The market needs to break out of this level. We do have a crossover that's bullish, but we're flat, no momentum. I'm looking for this market to break higher, shooting for these targets here. All right, we're probably done if the market violates this point here. The structure will be broken, and then we'll probably see the market drop much deeper. All right, but at this point, I want to see the market stay above this point where we are, so I can look for my trade. So I look for my trade on my lower time frame to get into the market, and it's very sloppy still. Nothing really set up clean to get into the market. I'm going to go back to the daily, and if I stay with the daily, I want to see some angulation on Kijinsen. All right, I don't want to see Kijinsen aim to the downside. I want to see it angle to the upside. Okay, now I thought this might be a P wave, but you could see we're making lower highs but not higher lows, so that won't be a P wave at that point. But again, looking for entry at this level. Don't quite have it yet. Now I could look for a morning star here. I like to get tighter to the level. We're tight as we probably could be. Doing this point with a morning star, you would be looking at the next candle and breaking through this level for entry and a stop loss below Kijinsen, shooting for at least this level here. All right, and then finally for your N level, and then your V level, and your possibly E level. All right, but we're stalled here, so we want to wait and see what the market's going to give us. All right, so let's move to the next. Euro pound. Euro pound. Did I want to look at this on the daily? Yes, I did. This is pretty much the same. Let me go to the monthly real quick. On this monthly, now you could see I've been showing you P waves. Now here's a Y wave. Look at this Y wave. Instead of closing to the inside, it opens up. All right. Instead of closing up, it opens up. And now this is a Y wave. So now you're in this Y wave structure. You could break to the upside or break to the downside. We're not at a real top, but we did have a double top up here, and then the market might break to the downside. But what I'm looking at is when I go to my daily time frame, I got levels based off of this level, and actually no, it was my last one I moved was from here, 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 and here. No, I did the big leg, so I did from here, here, and here, and I'm shooting for the market to get to this point. All right, and then this NT point, this end point, V and E. Now, how am I going to get into the market? How am I going to get into the trade? Again, you could see, let's go see what we could look at with Ichimoku. I don't actually have a trade set up yet, so the market's not giving me anything to get into the market yet. But when we do, we know what we're shooting for based off of this formation that we have here, and then shooting for the target. Now again, you could use the smaller levels because you would go 1, 2, 3, and then shoot for the smaller level targets, which would probably give you, let's look at them real quick, see what they are. So basically, let's look at the longest one, which is going to be your E level. If you get into a trade here, you're going to shoot for E level, will take you here. All right, so you'll be at this point about 94, 930. Your N level is going to be here, slightly above, so it'll take you to about 92,539 for 313 pips. Your NT level is going to be awfully tight. Your NT level is just going to be, we're above that level already. And then your V level is going to be, actually, sorry. And then add that. V level will be about 94,026. All right. So those are going to be the levels that you shoot for on a smaller scale. You don't have to trade more swing style. You can trade smaller style. Even on the lower time frames, if you use an hourly or whatever, you could do the same thing that I'm showing you here. All right. So that's what we're looking at on the euro pound. Let's go to the euro yen. Euro yen, I'm looking at this thing. Let's go to the monthly. Did I look at that monthly? No, I just was breaking down the daily. So when I looked at the daily, I could see 1, 2, 3, and shooting for 4. We didn't get through that 2 level that I told you about. So we might have fluctuation here. Now this is the 2 level, but it's actually the B level. So it will be A, B, C. We didn't get through. I call it the 2 level because I say 1, 2, 3, shooting for NT, N, and so forth. Well, these levels are drawn in. You could see this is your NT level. We weren't able to get through that level. We may see the market fluctuate here, but now you are bouncing off of this Tenkan-sen. You're still flat with Kijun-sen, but you also have fractal levels here that could help you hold support, okay, at this point, right in the area of your Kijun-sen. So we have some strong support. Everything on Ichimoku is bullish. You could say the crossover, Chikou span broke out of price, and then finally we had a rejection, and then the market dropped with this hangman. Quite possibly we might bounce off of Tenkan-sen and see the market continue higher. We would shoot for this end level at about 129,320, and then about V level 129,548, and then overall your E level at 134,436. Okay. All right, guys, so I am looking at this Euro USD. Let me see, did I mess with this on the upper time frame? No, I didn't. I didn't do anything on the monthly, but let's look at it real quick. So it looked like the monthly tried to put in quite possibly a formation here and break to the upside. Now we're back down. Again, you could see the structure developing. This might be a good moving market to the upside for quite a while for the Euro USD. Let's go to the daily time frame. So what we're looking at was basically we were looking at this point. So the market put in this P wave here, moving down, put in a P wave, 5-wave formation, breaks out, made a breakout, and then corrected itself. When we look at Ichimoku, guys, one of the things that you're going to always be looking for are these corrections to 1/3 and 50%. So 1/3 would be like a 33.5% or 33.3% retracement, which basically I'm going to say 38.2, which is your Fibonacci retracement level. So the market pulled back to that 38.2, and we'll also look for that 50, but that 38.2 is big. The market moved and pushed higher. Now, I put in my levels from 1, 2, 3. We broke the NT level, getting to the V level, and may get to the N level. So we should have been looking at entering the market in this area because we don't want to enter way up here. But now when we get to this point, you may start to see the market correct itself, all right? So we are pushing strong. I think this is going to be a strong market overall. If you look at the monthly, you'll be able to really deduct what you think the market's going to do because we're putting in this leg here, which may be starting a new N wave. And I would have to put in my numbers here and see where the target is, where this upper level is going to take us. But we could start to see this Euro USD start to move higher, pushing up towards this 124,328 area. All right. So good trade opportunity passed us by. We missed it. All right. But this is where we should have been getting into the trade to take this move to the upside, shooting for our targets here. All right. And then again, like I was telling you, that retracement is going to be big with Ichimoku. It's going to be that 33.3 and that 50%. Don't think 33.3, think 38.2. Okay. Going to be pretty much the same thing. So let's move to the next. That's Euro USD, pound Swiss franc. I think pound Swiss franc. What did I want to show you guys on this? Again, I wanted to show you the retracement again. Didn't really want to show you the trade too much. We do have an opportunity. I think we're a little late, but the market put in this leg 1, 2, 3, and then our targets are going to be NT. So anything, this market, we see this market drop to the downside, hitting NT, this N and V level down here at about 113.083 if we can break through this level here at 116.152. So we still could be looking for a trade entry here. Don't really have it yet. All right. But again, you could see the market broke, pulled back up to this support level that we have, this resistance level that we have drawn here, and this zone held, and then the market looks like it's attempting to fall to the downside. Don't have a good entry for myself yet, but we'll continue to watch and see if we can get into this to the downside. I'm moving a little faster now. USD CAD. Again, another one that we just put in. You could see this is the daily time frame. Let me go to the monthly, see if I did anything. No, so let's go back to the daily. Basically, you could see I had a nice Y wave here, a P wave here. Then the market dropped to the downside. So this basically was continuing to the downside, a continuation basically, maybe, to the downside. And then we said 1, 2, 3, shooting for 4. This is the first level, NT. Market's dropping towards that point. When it gets to NT, we may see some correction here. When we correct, we may be able to get into the trade. Now, again, we're going to look for those retracement levels where we could also look to get into the trade. I a lot of times look for the fractal, but it doesn't come to the fractal all the time. So you could use your retracement levels. And I told you we're going to be shooting for that 38.2 and that 50. So this one pulled back right about a little bit past 38.2, in between 38.2 and 50. And then the market dropped back to the downside, came, sat on the 38.2, and then continued to drop to the downside. All right, so you could see that market moving to the downside, shooting for this target at NT. We're going to look for another entry in the market. If we can retrace back to this zone right here, we're going to look for a short. So maybe a little correction back to the zone, then short it again to the downside. We're going to shoot for the NT level and the VN level. All right. So that is that. We're going to go to the next one, which is US dollar Swiss franc, and then we have one more. So US dollar Swiss franc, didn't really want to show you anything as far as the Ichimoku is concerned, but basically wanted to show you that we have a nice strong support zone here. So we're looking for the market to change direction here, give us a little correction and a possible move to the upside. Not saying we're going to be seeing it give us a full-blown move to the upside, but we may get a bounce in the zone here with a chance to move to the upside. You did put in a P wave back here, and then the market dropped to the downside. This way it was not a continuation, but you could see that P wave. When you see that formation, look for that, and then watch for the breakout. The market moves to the downside. Strong angulation with this thing. We may break right through this level here. Very strong level though, as you could see. And when I go to the monthly, let's see what it is. Very strong level on the monthly. All right, so that we're looking to see what happens at this point. So back to the daily, and then let's go to this last one, US dollar yen. So US dollar yen, all I wanted to do was show you again the monthly time frame. Wanted you to see this P wave we put in, and you can see we didn't break yet. So we're starting to break, looking for a possible break to the downside here, right? So with that downside break here, we'll be able to enter the market short. Now let me go to the daily. You almost put in a head and shoulders here with this being the neckline and a close below this level. I was looking at this today. We didn't really close below this point right here, which is big to me because it kind of held as a support level. But I want to see the market get through this level. All right, so I pretty much won't take the first break. What I'm going to be looking for is a break of this level, and then for the market to put this in for me. Let me delete that. I want to look for this move here. Drop, come back, and then I'll trade again right at that point short. And then we could shoot for these targets that we have in here. Actually, we didn't even put them on here, but we do need to put them so we could see where we're looking to go. But a nice break out of here will give us a nice trade. Daily time frame, I can put the targets in. Will be small targets here because we were flat here, so it won't be real big. So just going to look at the levels of structure to go to, and the first point that I see right off the bat would be somewhere in this area. Maybe this point starting off. All right, because you can see how the market stalled at these points. Stall. So again, this level strong. Then back here. And then you would be shooting for this point. We're looking to short this. All right. So that's what I got. That's what I'm using, how I use Ichimoku a little bit. Didn't give you all the details, but showed you some things as far as a lot of observation theory, because you'll be using that a whole bunch. And then starting to incorporate the time analysis is going to be time consuming to learn. You got to really put in the time to learn this. This is not a simple system to just learn if you want to learn the theories. If you want to just learn the basics, yes. And the other thing is, all the books aren't even all in, they're all in Japanese, so it's really hard for Western traders to get all the details and every single thing unless you really know somebody and they're willing to share that information with you. All right, guys, so hopefully this helped you out. But until next time, again, visit my website. Hopefully, if you want to learn more about this advanced stuff, you'll be able to see what I got. I got a course that's going to be updated soon with even more info, so it should help you out. And lifetime membership. What else could you ask for? Until next time, guys, have a great one. God bless. So long.